Hey traders, welcome back. In this video, I'm going to walk you through one of my favorite and most powerful strategies for Bitcoin, the BTC sweep reversal. It's a simple but deadly effective concept that I trade every single week, and it's built on understanding where the market grabs liquidity and how it reacts right after. As many of you already know, I'm a huge fan of false breakouts. In fact, they're the core of how I make money trading every day. I obsessively draw ranges and look for areas where price consolidates. And on Bitcoin, that consolidation happens automatically every weekend when institutional players and big money are out of the market, but the orders are still coming in. Stop losses keep building up above and below the range. And over time, I have noticed a pattern that repeats almost every week. Let me show you exactly how it works. Subscribe to my channel and turn on notifications for more real trading content. And don't forget to join my daily live stream where I take all my trades live. Every weekend, Bitcoin tends to slow down. Liquidity dries up, volume shrinks. But what happens right after the weekend? Boom, liquidity hunts. We see price sweeping either the high or the low of the weekend range and then sharply reversing. And this strategy is designed to catch that reversal with defined risk and clean market structure. First, let's draw the weekend range box. This is super important. It sets the stage for everything else. The range starts on Saturday 00:00 New York time and ends on Sunday 23:59 New York time. That means the last H1 candle on Sunday is the one from 23:00 to 0:00, and that candle is included in the range. So you're taking the highest high and lowest low from this time window. That's your weekend box. Draw it across the chart into the upcoming week. Now, here's the key part. I only look for entries from Monday 00:00 to Wednesday 20:00 New York time. That's it. No trades on Thursday or Friday. Why? Because I've noticed that setups taken on Thursday or Friday just don't work anymore. The market often lacks the momentum to reach target levels. And remember, the whole idea behind this setup is based on the word dynamic. Is Thursday or Friday, after 3 days of slow drifting, really a dynamic return to the range for you? For me, it's way too late. That's why I only take these trades early in the week. Here's how I enter. Price sweeps above the weekend high or below the weekend low. Then I wait for the next hourly H1 candle to close above the last recorded swing high. At this point, I enter a long position. Alternatively, if the H1 candle closes below the last defined swing low, I enter a short position. This close acts as confirmation that liquidity has been absorbed from one side of the weekend range, indicating a small market structure shift. In this case, a liquidity sweep is when price quickly moves beyond a known support or resistance level to trigger stop orders, then reverses sharply. This is shakeout causes traders to get stopped out, allowing smart money to enter in the opposite direction. Some people like to say that price hunts for stop orders before reversing. Honestly, I don't care who's ultimately behind the price move. What matters is that it happens. This setup has a strong potential to reach the intended target. I always place my stop loss just below the swing low when going long, or just above the swing high when going short. These levels invalidate the trade idea. On screen, you'll see examples of what this looks like. Notice how price breaks out of the box, prints a swing, then flips back in. That's the moment I strike. Swing high A high between two lower highs, classic failed breakout, swing low. A low between two higher lows, fake downside. You can mark them easily using basic price action or automatic swing tools. My stop loss goes just above the swing high if short, or below the swing low if long. That's the invalidation of the idea. Target, I look for a minimum of 2R, but often I take a main portion at 2R and trail the rest behind. Structure, risk per trade, always 1% of account equity, no more. The strategy has a roughly 50% success rate, and only 1 week out of every 25 doesn't produce a setup. This means trading signals appear almost every week. Over the past year, strictly following a 2-to-1 risk to reward ratio, the strategy delivered a 27% profit. I always risk just 1% of the account's base value per trade. The longest losing streak was 5 consecutive losing weeks, and the longest winning streak was also 5 weeks in a row. In trader terms, this means a possible maximum drawdown of around 5% when risking 1% per trade. Of course, if you increase your risk to 2% per trade, you could expect roughly 54% return. The math is simple. However, and I want this to be very clear, this is not investment advice. Past performance does not guarantee that the strategy won't fail in the future. I trade this system as a set and forget with a 2-to-1 risk to reward ratio, risking 1% of my account per entry. After hitting the main target, I move my stop loss to break even and manage the remaining position, about 0.2% of the account, by trailing it behind swing highs or swing lows to maximize profits. This approach has given me peace of mind and allowed me to achieve a 37% profit over the last year. Of course, you should always test any strategy yourself and backtest it according to your own criteria. I'm just sharing the basic proven framework that works for me. The key here is discipline. Only take 1 trade per week. If it hits target, you're done. If it hits stop, wait for next week. This strategy is designed to remove FOMO and force quality over quantity. I manually test it every week over the past 4 years, trading a strict 2-to-1 risk to reward ratio without discretion, simply following the setups like a robot. The strategy yielded a 28% return. When I tested it, assuming a risk of 1.2% of the account, which is how I actually trade it, with 1% risk per trade at a 2-to-1 RR and 0.2% managed further by trailing stops behind swings, I achieved a 36% return. This is an excellent result, especially considering the maximum weekly loss was just 1%, and the total drawdown stayed around 5%. Squeezing the maximum out of every move, it was possible to achieve a 147% profit over the past year, although this is obviously impossible in reality. However, by using a strategy with a partial runner, an annual return of around 35% is quite achievable. Some may consider this low, but I believe that for a set and forget style strategy, it's an excellent result. The key is to be consistent and stick to the plan, and we all know that this is the real challenge for traders, not the strategies we use. So that's the BTC sweep and reverse strategy. Simple rules, solid edge. It's been a part of my weekly process for years, and it continues to deliver. This strategy is a supplement to my daily Forex trading and my main source of income, which is trading S&P 500E mini futures. I stream my S&P 500 trades live every day on my channel. If you have any questions about this strategy, feel free to ask in the comments. I'll be happy to answer. I also encourage you to subscribe to my channel and turn on notifications for more real trading content. And don't forget to join my daily live stream where I take all my trades live. If you found this valuable, like the video and subscribe for more real trading setups. No fluff. Trade safe. See you in the next one.